Hello there, Dean Rinker, Keller Williams Realty here with the October 2022 real estate market update for the greater Sacramento region. Understand too, folks, whether you're thinking of making a move or not, thinking of buying or selling, you're still going to want to watch this because we're going to be talking about what's happening to your home's value and mine with interest rates since interest rates have been going up over the past few months. So I'm going to share my screen here. We're going to get started. Lots of great information to share here. So let's get started. So let's talk about interest rates for a moment. First of all, rates today are about 6.7%. Fed raised rates last week, again, another 3/4 of a point, which translated into higher interest rates in the mortgage market as well. We actually were a bit above 7% last week for a couple of days, dipped back down. But what's interesting here is if you compare this to beginning of 2021, January of 2021, we hit our low of about 2.6%. So we're up considerably since then, as you can see. And of course, even the beginning of this year, we were only at 3.1%. So we've more than doubled just since the beginning of the year. So what's that doing? Well, when interest rates go up, we see a reduction in buyer demand. Not as many buyers can afford to buy right now, or at least they can't afford to buy as high priced homes as they could previously. So what does that do? That puts pressure on prices to adjust, and typically that's adjust downwards. But it's not all doom and gloom. We'll show you that. So first of all, this graph shows what's happening with home sales and new homes coming on the market in the greater Sacramento region. So if you notice here, this is September. Last month, we had almost 4,000 homes on the market and 1,600 of those sold. If you compare that to just a year ago, notice in September, we had 3,000 homes on the market and 2,500 sold that month. So you can see the big discrepancy here. We're actually seeing the number of homes for sale going up about 31%, and the number of homes sold also going down 31%. So that's a 62% gap in that. That's significant. Homes are still selling, but they're the ones that are priced right. So you can see here the big change in that box. This is average price per square foot. Last month, we saw $332 on average. The year before, it was $321 on average per square foot. You can see that's increased just a little bit, 3.4% from the previous year, but notice the trend. We sort of peaked in the April-May timeframe when rates first started going up, and of course, we've seen a steady decline. It's very possible that this trend will continue and then bring us eventually back below last year's prices, with the understanding that even last year's prices were a heck of a lot higher than the previous year and pre-pandemic. This is average days on market. CDOM stands for cumulative days on markets. In other words, how long does it take a house, once it's put on the market, to sell? Last year at this time, we were seeing homes sell in a little over 2 weeks. Currently, it's taking a little over a month, over 4 weeks. So we've seen a 118.8% increase in the time it takes to sell. The green line is comparing the sales price to the listing price. In other words, how much above or below the listing price do homes actually sell for? And we saw for a while homes were selling above list price. That mellowed a little bit. We saw homes selling above list price again beginning of this year, but we're starting to see homes sell a little bit below. On average right now, whatever home price it is on that property, it sells for absolutely about 95% of the list price. This is median sales price, very similar to the the average sales. I can't even talk today. The average cost per square foot. This is very similar, and this is the median price. Notice our median price last month was $570,000. A year ago, it was $556,000. So it is definitely up from last year. But if you notice here, we peaked early part of this year, and we've seen a decline in the median price in the Sacramento region. That is likely to continue, keeping in mind, though, prices are still significantly above the median price before. And this is what this graph shows. This is from my friend Ryan Lundquist, who's a local appraiser, and he operates the Sacramento appraisal blog. He always has great statistics. You can see what these are is the median prices throughout the year from 2016 to this year. And of course, what I want to show you here is we've seen a steady decline since May of the median price in the Sacramento region. Projected out, we may eventually get below what last year's price was at this time. But understand too, if you look at the median price for last year, 2021, it was significantly above 2020, which is that green blue line, and 2019, which is the purple line. So prices have gone up significantly in the past 2 years, 3 years, but we are still starting to see that decline here. But again, still way above pre-pandemic levels. So hope is not all lost. Even if prices continue to drop in the next few months, we're still expected to remain above pre-pandemic levels. So while we may not be making as much we may not have as much equity now as we had earlier this year, we still have much more equity than we had pre-pandemic, since before the pandemic. So my focus 5 here, point number 1, the Federal Reserve is likely to continue to slow inflation by continuing to raise rates. We're up over 4% since January of 2021 and up over 3.5% since the beginning of this year. We're now closer to 7%. Understand, folks, rates go up and rates go down. So for those people thinking of buying, you can still buy now, and understand you can always refinance the rate later when it drops. Point number 2, over the past 12 months, the number of homes on the market is up 30%, and they're down 31%. So big gap there. Number of homes on the market's going up. Again, demand has slowed because of interest rates going up. Therefore, supply continues to increase, and the actual number of homes down is 31% compared to last year. Point 3, over the past 12 months, the average price per square foot is up 3.4%. The median price is up 2.5%. But this may be changing, since some projections indicate we may dip below last year's prices, understand, which is still way up compared to pre-pandemic levels. Point 4, homes for sale are taking about twice as long to sell over the last year, from about 2 weeks to just over 4 weeks today. And of course, the Fed has indicated it may continue to raise rates, which will continue to affect buyer demand and thus affect values. But remember, again, I've said it a few times, values are significantly higher still than pre-pandemic, before the pandemic. So the bottom line, if you're thinking of buying, remember that rates will eventually drop, so you can buy that house that you want now and refinance later. We say in the industry, you buy the home, you marry the home, you date the interest rates, okay? Because you can get into that home now, you get into that new home now, and always refinance later if you can do it with 7% rates now. And if you're considering selling, be prepared to price it right from the start, making sure your property does not sit on the market. The longer a property sits on the market, buyers see that obviously it's not selling, therefore they think other buyers have rejected it, and or that there's something wrong with it, and then you tend to get lower prices. So it's real important to keep that in mind. That's all I've got for this year, or this month, excuse me. We'll end the share here, and I wish you all the best. We'll see you next month.